Master your money, free your future. Welcome to Budget for Life. My name is Jeremy. I'm not a professional YouTuber. I'm a financial advisor, but this video is not financial advice. In this video, we're going to talk about GameStop's interest income. How much money are they making with their money? And I'm going to show you how we can know really pretty close to accurate what that is going to be, even projecting into Q3 specifically. So before I get into it, just want to say thank you for all the watch time. Thank you for the commenters, the subscribers. Thank you for the viewers. Thank you to those who join as fans or as friends of the channel and get some extra perks with that. All the earnings of this channel go to DRS Book GME shares. So far, the channel has locked up 13 shares of GME, and I'll get paid in about 3 weeks or 2 weeks for October, and we'll get to see how many more shares we can lock up together. So I appreciate the support. Okay, so the best way we can figure this out, let's start with what was Q2, right? And they recorded a $79.6 million gain or interest income just generated from their cash. So the 28.6 million below it is the gain they made in Q2 from their Bitcoin. They made about 80 million from their cash. A couple things we want to understand about this number. Basically, we want to figure out, can we solve for this number, right? How did they end up with a $79.6 million gain in interest income in Q2? And one thing I wanted to point out is that the cash that they recorded on their balance sheet at the end of Q2, right, which just if you net out the Bitcoin, the cash is 8.694 billion. The cash they record at the end of the quarter is not where they started the quarter, right? They started the quarter as they ended Q1, right? At 6.3. But mid-quarter, right? So Q2 began on May 4th, right? The day after Q1. But on June 17th, they raised 2.68 billion in convertible bonds. This is money that they received that they owe a 0% interest on. So whatever cash pile they began with, right? Basically, if you model it out, from May 4th to June 17th, they had about $6 billion in cash, which is 45 days worth. And then from June 18th to August 2nd, they then had that 8.694 billion in cash due to the money that they raised. Or those aren't to the exact dollar, to the exact day, because obviously they are also generating cash from their business that then is growing their cash pile. But this gets us really close to, okay, whatever they earned in Q2, hypothetically, they have a higher ceiling for what they can earn in Q3 because they started Q3 with that 8.694 billion. They didn't have that for the whole portion of Q2. So, where are they investing that money? Based on what they are communicating, their investments. Okay, this is from their most recent 10Q. It says, we have invested some of our excess cash in investment grade short-term fixed income securities, U.S. government agency securities, as well as time deposits. So T-bills and government time deposits. Such investments with an original maturity in excess of 90 days and less than 1 year are classified as marketable securities on our balance sheet. So let's see how many of their investments are listed as marketable securities. Check it out. None. For the most recent quarter, now this could change. Okay, we don't know. Literally, like the curveball with all this modeling, all this projection is it's possible GameStop just did something different, right? They could have done something different than what they've historically done. But what we see, the story from their 10Ks and 10Qs is that earlier on in their cash history, they were putting some of their cash into 6 month or 12-month plus T-bills. And when they do that, it's recorded as a marketable security. Basically, they knew back here, when they didn't have as much cash to their name, they knew two things. One, they knew that the odds are that Fed rates are going to come down, but also they knew that they are not going to deploy this cash anytime soon. And so they could lock it up for 6 months or 12 months plus without worrying about the opportunity cost. And what we see in their most recent 10Q is that they are flushing out all of the 60-day, all the 30-day plus securities and or T-bills and saying we want it in shorter time frames than that. Right? 90 days. Sorry. We want it shorter than 90 days because at any point we want to be ready to deploy some of this cash. So we can actually have a pretty high guesstimate on the T-bill rates, whether they're buying 3-month T-bills, aka 90-day T-bills, or 1-month T-bills based on the current Fed rates. Now, when you're looking at their Q2, right, how do we get to that 79.6 number? And then how does that help us model what the number might be in Q3? You'll see right here in this cell, I already have minus 9.3. That's a $9.3 million loss estimated from Bitcoin. Made a previous video modeling that if you want to dive into it. But I went ahead and broke out if they invested in the 3-month T-bills or in the 1-month T-bills, what that would have generated in interest income. Basically eyeballing the approximate average. Okay, so for example, the May 4th to June 16th on the 3-month time frame, you see they started about 4.3 on the 3-month rate, and then the quarter ended August 2nd. So they ended at 4.3, they started at 4.3, but most of the quarter they were at 4.4, 2, or 3. And so I kind of took like a average eyeball of the 3-month rate if they were all in 3-month bills. And I called that a 4.38 kind of like weighted average. Obviously, it's possible that 100% of their cash they invested at 4.3 and they get it back in 90 days, but most likely they do some type of blend, right, of rolling staggered investments. And the question is, are they weighted more towards 3-month or weighted more towards 1-month? Can we solve for it? So then, or sorry, yeah, a 4.38 on that May 4th to June 17th window, because they ended up kind of, most of that was up here. And then I called it a 4.4 on the June 17th to August 2nd. Basically, just the very last 2 days were down here at 4.3, but almost that whole period was above 4.4. So if they were all in 3-month bills, kind of reinvesting, as those 3 months come to expire, you would have gotten an $80.7 million gain, 80 million gain in interest income for their Q2. Now, if you do the same thing with their 1-month, again, you eyeball the rates for that May 4th to June 17th window, June 18th to August 2nd window. Again, you can kind of scan and do it yourself, but you end up with a lower rate in general in that first window, and then again, a bit lower rate in that second window. It took a while for it to come back up. And so I called that a 4.29 in that first window and also a 4.29 in that second window. Because, yeah, basically this valley happened right in the middle of those two windows of time. All that to say, if they were all in 1 month, you'd end up at a $78.8 million gain. In reality, they were at 79.6. So what does that tell us? Well, it's $1.1 million less than my 3 month approximation, and it's $0.8 million more than my 1 month approximation. So they probably are investing in both 1 month bills and 3 month bills. Again, they probably do not have longer than 3 month T bills, and they've already said it is the US government bills that they are using, that they're investing their excess cash into. At least so far, that's what they've done. And then they just added Bitcoin, right? Which they talk about below. And they reserve the right to deploy cash. But Cohen spoke in an interview recently, highlighting how basically he's waiting for a market crash before he truly deploys more of this cash. So they're probably blending 3 month and 1 month, weighted a little bit more towards the 1 month, and probably even more so moving forward, weighted towards the 1 month, so that again, they can be ready whenever that inevitable market crash happens. But you could also argue maybe they'll wait more towards the 3 month, or maybe they even start buying some 6 month plus if you are very bearish on how aggressive, like if you think the Fed is going to cut rates very aggressively very soon, you can make the case that GameStop's going to start buying longer term T-bills to go ahead and lock up rates. I would say that they are more interested in keeping their T-bills flush, keeping their money liquid in light of how much excess money they have and their communicated goal of expanding and maximizing shareholder value through their cash utilization. I think they want to be ready to utilize this cash and they're comfortable with if the rates come down. And that's part of why they own Bitcoin, because Bitcoin has a beta of 2.5 or 3 or something. And so historically, if rates come down, the market would have another rally, and if the market rallies, Bitcoin would rally twice as sharply as the market rallies. And so whatever they lose in cash interest, they would probably gain back in Bitcoin gains. All that to say, Q3, you've got a 91-day period that ended on November 1st. And let's just say they for simplicity's sake, all the free cash flow that they generate from operating income is just reinvested into their holiday inventory ramp. So let's say that 8.69 stays static throughout the whole quarter 3. In reality, it's possible that they actually have a little bit more than this money throughout the quarter as their business is making money. It's also possible that they're spending more of this money, right? That their ramp into inventory is in excess of their operational earnings or in excess of their free cash flow. So let's just say it's a moot point, plus or minus, but let's just stick with that cash rate. Again, if you look at that 3 month rate versus the 1 month rate for the August 3rd to November 1st, the 3 month rate I call a 4.3%. The 1 month rate I call a 4.25%. So it just depends on how much of it is invested already, right? When you're looking at the 3 month rate on August 2nd, you start at 4.35, you hang at 4.3 for about the first month, but then pretty quickly you're at 4.1 and then 4.0 and then a little bit below 4 towards the very end of the quarter. So I think 4.3 is a little bit aggressive, honestly, as an estimate, because that's basically assuming they lock up their 3 month rate right at the beginning of the quarter. A more probable kind of weighted um, yield is probably more like a 4.19 on the 3 month. On the 1 month, August 2nd, you start at a 4.4. You hang there for about the first month. Then you dip to about a 4.2 until the very end getting down to a 4 on the 1 month rate. So on the 1 month is actually a little bit more favorable than the 3 month in Q3, in GameStop's Q3. And I'd call this, I mean, a 4.25 is probably fair for an average yield in Q3. So you end up with maybe somewhere between a 90.8 and a $92.1 million gain for Q3, skewing a little bit more towards the 1 month because our best estimate for Q2 is that it's skewed a little bit more towards the 1 month. What's the total difference between these two numbers? 1.3 million. So if we say it's basically a 90, if it's a 91.7, then we're saying it's 400 million less than the 1 month, 700 million more, or 900 million more than the 3 month. I like it. $91.7 million gain in Q3 for GameStop's interest income. Their cash income minus that 9.3 of Bitcoin loss, you're looking at a free $82 million, supplementing what will be an operating income that will more than make up this difference. I think. Stay tuned for a future video. About $400 million more in revenue. Will that be able to make up more than a, $26 million decline in interest income? Which again is due to the Bitcoin swing. The cash is generating $12 million more in Q3 than it did in Q2. So again, some people are a little nervous about the rates getting cut. How does that impact GameStop's ability to generate cash from their huge cash pile? Well, so far, their cash pile has been growing faster than the interest rates have been coming down. And regardless, as far as how you value the company, people are going to be much more interested on what is the operating income doing than what the interest income does in the interim. But you basically have a $400 million annualized rate on average that you're getting just from your cash in Bitcoin. If you were to project future years, if you were to project future quarters, I mean, you're looking at about $100 million a quarter on average that GameStop's going to earn just from their assets. Pretty amazing. All right. Let me know if you learned anything. Let me know if you have any questions on GameStop's interest income for Q3 or any other related questions. That's all I got for you in this one. Appreciate you being here. I will see you in the next one.